Be Wealthy and Smart, episode 1438.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about what the labor market report is telling us. Today, the November jobs data came in and showed that non-farm payrolls increased by 227,000 last month, which was above the estimate of 214,000, and showed that the unemployment rate was about 4.2%, which was as expected. What we wanted to see was the job market be not too hot, not too cold, but just right, so that the Fed can continue to cut interest rates at their next meeting on December 18th. There is now an 88% chance, according to traders, that the Fed will cut interest rates by 0.25% in December. Lindsay Rosner, head of multi-sector investing at Goldman Sachs Asset Management, said, "Data this morning was a Thanksgiving buffet, with payrolls spot on, revisions positive, but unemployment ticking higher despite the participation rate falling. This print doesn't kill the holiday spirit, and the Fed remains on track to deliver a cut in December." The U.S. economy added more jobs than forecast, as the labor market rebounded from a month negatively impacted by severe weather and labor strikes. Hurricanes and a strike by Boeing workers weighed heavily on the October report, which was revised upward to show there were 36,000 jobs created in November. November's 4.2% unemployment rate compares to an October unemployment rate of 4.1%. The statistics were also revised for September to the high side, now indicating the U.S. economy added 56,000 more jobs than initially reported in that time period. RSM chief economist Joe Bruselas said Friday's report reflects a remarkably calm labor market that is at full employment after accounting for October's distortions. Wage growth, which we watch for inflation pressures, rose 0.4% in November, which was in line with October's increase and higher than the 0.3% rise that was expected by economists. Robert Socken, Citi senior global economist, said for the Fed, these numbers are going to be right in the spot of what they were looking for and they're comfortable with to continue easing policy at least at the December meeting. This doesn't change the narrative that likely rates are restrictive and they have to at least come down a bit more at a gradual pace. Socken added that while the increase in the unemployment rate could be seen as an early sign of concern that the labor market is weakening, the metric remaining in the low 4% range for the past several months is sort of the definition of a soft landing. He said when you look over the last several reports, the Fed will be fairly comfortable that they're still getting that soft landing, but there are enough risks that I think they still need to lower rates. So that's what we're expecting, and that's what 88% of traders are expecting, is that 0.25% rate cut on December 18th at the next Fed meeting. In my view, we're going to have more rate cuts into 2025 as the Fed remains too restrictive for what the numbers are showing. In the meantime, the NASDAQ and the S&P both hit intraday highs on Friday, so the stock market liked the news that the economy is having a soft landing, except for interest rates being slightly on the high side. We'll keep following the news and keeping you informed as things progress. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.